Welcome to the Times of Industry show. I have a fantastic interview for everyone today. A lot of value in what we're going to do. I have Clayton Morris with us today. I usually do not do real estate investing shows, but I think it's such an important topic, such a misunderstood topic in America, especially 11 years after the greatest financial and real estate meltdown in this country's history. So Clayton Morris is morrisinvest.com. The founder of the company. They do two things. They do educational stuff, and they also do turnkey properties, which is exactly up my alley. That's what I like. Simple and easy real estate that you can do. And also he takes you from zero to expert with his courses and everything. Great company, and we have the founder. So Clayton, thank you very much for taking the time today.
Hey, thanks so much for having me on the show. I'm excited to talk real estate, turnkey, and also just the current trends in the market, what's happening right now. So thanks for having me on.
Yeah, definitely. The reason I want to get you on is because you bring such a slew of information from many aspects. And what I want to start off with is one of these very controversial areas, which is the millennials. On one hand, you hear a lot that, look, this 25% of the American population, so the largest in age group, they don't have the economic force to drive the company forward. They're in debts and student debts. The banks don't want to work with them, don't want to lend them, and therefore they're permanent renters. They're not going to go into their own homes. They don't want to start their own families. They want to be bachelors and bachelorettes forever. There are all kinds of mantras and etc. I want to get your take on millennials, the facts. What's going on in real estate right now? Where are they forming families? Which cities do they like? What do they like to do? Are they the economic driver behind the coming decade in real estate? Do you focus on other stuff? I'll give you the floor. Talk to us a little bit about the millennials.
Yeah, I mean, millennials is one of the more interesting parts of the real estate world right now. They are saddled with an enormous amount of debt. And this is one of those things that I'm super passionate about. If I can get people to pay attention to really thinking about where they're putting their money for their education, coming out of college with hundreds of thousands of dollars in student loan debt on a degree that they are never going to use and a degree that they're never going to receive the return on that investment. You know, if it's one thing to go to school to become a doctor because you know the return on that investment. You can count on after this number of years, you're going to make this money back. Being a dentist, an architect, etc. But so many people are they think they have to go to college because their parents wanted them to. They get a degree that they're never going to use. They're saddled with hundreds of thousands of dollars in student loan debt, and they're set up for failure before they even get started. They're into their 30s before they actually can start seeing, any money that they can make that they're not paying off in debt. So that's one part of it. And I'm super passionate about it. I think it's a huge crisis that we're facing in this country right now. It also, if they're that much in debt, that also means they're not saving or putting what I teach, is helping people build passive income through real estate investing. That's what my company does. I mean, when people book a call with a member of our team, we really try to understand what their goals are and really try to move them towards acquiring passive income and performing assets that they can hand down to their kids. Well, these millennials, they're not there yet. They can't, they're paying off all this debt. Do you think that they have the money set aside that they're going to be able to buy a 3-bedroom house, in the Midwest for $70,000? No, they're not going to be able to do that. So that's another piece of this puzzle. And then another piece of this puzzle is that millennials simply aren't buying homes. I mean, because of the student loan debt that they have, they want to be kind of in the city centers, right, where they can go out to a cafe and go to the gym and go to their job. They're leaving the suburbs and wanting to get back into those city centers, and they're renting. Millennials are renting. We are a rental nation right now, which is great for me. We have an enormous need for affordable housing in this country. And so what are millennials doing if they can't afford it? They're not buying a house for themselves. There's actually a story out this morning just on the Wall Street Journal just talking about this, how millennials are not buying houses for themselves. If they do have money, they are buying houses like what my company does, like in the Midwest. They're buying investment properties for cash flow. They're like, well, why would I buy a property to live in that's $500,000 in this city when I could buy, 2 cash flowing performing assets in the Midwest somewhere. And so we're seeing this really interesting dynamic right now with millennials. And one good thing I think is really good about this is that millennials are getting the message about home ownership. The home you live in is not an asset. It's not a performing asset. A performing asset is something that puts cash in your pocket every month. And I'm a big believer in you should rent where you live and buy performing assets to pay for the rent where you want to live. And I think that that's starting to sink in with millennials. I know it's a controversial subject. Your audience might be like, what? But, that's the thing. A liability is something that's taking money out of your pocket. If you live in a house and you're not renting out a room to somebody and you live there, you're paying for the expenses, you're paying for the repairs, you're paying the taxes, and your money's going out every month to a mortgage or someplace else. And there's not money coming in. So at least that message with millennials may be starting to resonate a little bit.
Definitely, it's one of the classic Kiyosaki quotes that your house is not an asset; it's a liability, and it's a lifestyle choice to own a house. The only way it actually can generate something is if it appreciates in value and you use a home equity loan and all that kind of stuff. But if you do that and the rest of the nation does that, we saw what happens in 2008 because of that. I want to ask you, where will the growth occur in the coming decade? I mean, what's important right now to real estate investors to watch? Is it the zero income tax states? Is it the good weather? Is it the jobs, the population growth? Where's America going? I mean, people used to want to live in one place. Now they want to live in another place. People are leaving the top markets and they're going to other markets. Talk a little bit about your analysis of how America is changing and preparing itself for the next decade.
Well, people are leaving those high tax states. People are leaving New Jersey. People are leaving California in droves. And they're moving to Tennessee, Texas, Florida, income tax states, zero income tax states. And that's where we're also seeing the best investing happening as well. So the areas that I love to invest, Texas, middle of the country, lower property taxes, lower taxes all around. And I think the biggest growth that we're going to see in the United States over the next 5 years, we're already starting to see it. On the commercial side, commercial real estate, it's warehouse space. People love getting things delivered to them in boxes, whether it be Amazon or any kind of box. People love getting stuff, butcher box, you name it, right? People love getting stuff sent to them in their house. And we need warehouse spaces. And not just Amazon. I'm talking smaller companies like I mentioned that need distribution centers. So what's happening in the commercial space is fascinating, right? Floor office buildings, replacing them with single story warehouse space because that's more valuable. That's more needed right now. And so incredibly important that, if you're paying attention on the commercial space side, that's where the money is going. Single use, very easy to build, and they can be up and built in a matter of no time. Another really interesting space on the residential side, the area that I invest in on the residential side, is affordable housing. America has an affordable housing crisis. And you're seeing many municipalities now kind of forcing developers to build affordable housing because we don't have it. We simply don't have enough of it. And what's happening, hedge funds have gotten so hip to this now that instead they're having a difficult time even finding single family, 3-bedroom, 1-bath houses. So what they're doing is they're building brand new ones like I am. So our team, we're building brand new construction rental properties because you have to. We just don't have enough of them. And we have such a demand for lower priced, affordable housing in this country. We need tens of millions. I think the estimate is over 20 million. We need over 20 million places for people to live affordably. And this country, we don't have it. So if you want to invest, that's not going away. I mean, and if a hedge fund comes in and builds 200 units in one town, that's not even a drop in the bucket. I mean, that's so small, that's so tiny, that's nothing. We need millions of affordable houses in this country. And that's where I like to invest. And I think to me, it's one of the smartest plays. If you're not investing in affordable housing right now, you need to get your head examined. We have such a demand for it. As soon as we're done building one of these new construction properties, it's rented like that. So that's, to me, where we're seeing the biggest growth. Warehouse space, people love boxes and stuff being delivered to, and affordable housing.
That's very interesting, Clayton. I want to ask you, look, for the average person, okay, for someone who's trying to invest in real estate for the first time, what's the upside compared to investing in REITs? We talked about this a little bit before the show.
Right.
With REITs, you can invest in companies that own hospitals and mini storage units, and they own theme parks. They rent to the government. All kinds of niches that you can't as a residential investor. But as a residential investor, an investor in directly ownership of properties, there are other benefits. There's leverage you can do, which is good leverage, or in good debt, which with REITs is impossible. Can you talk about the pros and cons of REITs compared to direct ownership of real estate?
Absolutely. I mean, and I'm so glad you asked that question, because that's something that gets under my skin. I hear people saying all the time, I'm just going to invest in a stock. I'm investing in the stock market, REITs, real estate investment trusts. That's basically the stock. It's a stock market play. And you're not actually really investing in real estate. You're buying stocks, and that stock can go down to zero. And one of the smartest accountants in the world, who's a friend of mine, says, if you're going to invest, you should be investing in a real asset. So invest in real estate, actually owning the property. When you're investing in a REIT, you're like 3 steps removed from actually owning that property. So I'm a big believer in buying the actual asset itself, investing in a tangible, real asset that you can then get the tax benefits of, which you can't when you're investing in REITs in that way. So understanding the benefits of depreciation, doing a cost segregation analysis on that property with a proper accountant who can do it for you, so you can accelerate the depreciation on that asset much more quickly. It's an amazing tax shelter. It's an amazing business to be in, right? To be a real estate professional. You're in a whole other tax bracket as well, if you can prove that you're a real estate professional, active real estate professional at 750 hours a year. And investing in actual tangible assets gets you a whole nother level of investing. So I'm just a big believer in, I'd much rather have, and I know there are people out there who are just like, I don't want to deal with it. But if you have, like what we do at my company is, building or renovating a property so it's fully renovated, cash flowing with a tenant in place, and managed with a great property management company, you really get to be hands off, other than nurturing your portfolio, find day-to-day things that you're having to do. Now, if you're managing a property yourself, there's no way I would ever manage a property myself. And that's where you start to become, you hear about the tired landlord syndrome. That's because you're managing a property yourself. You should be working with a great property management team that can help you and take care of that property for the long term. And God knows, we've worked with some terrible property management companies in the past. And we've grown tremendously as a company, because we used to even sell our properties years ago where pre-renovation. So if something came up with the city on a permitting issue, we'd have to wait. And from a customer service perspective, it was way better for us to say, hey, we'll take on all the risk up front, renovate the property, build a brand new property from the ground up, get a tenant in place with a great property management company. So all of that front loading, much more expensive. The risk is all there on us. But from a customer service perspective, it just made more sense and less headaches on the back end for everyone. So those are my short thoughts on real estate investment trusts or REITs.
Okay, so let's get to the nitty gritty. Where are some good places, good cities to take a look at properties right now, and what's too hot in your opinion? The valuations don't make sense, and then on the flip side, what are some attractive cities that you see sustainable growth for years to come?
Well, we're always analyzing markets. That's one of the things that my team does tremendously. Preston on my team is amazing about this. And I'll be like, where are you today? He's like, oh, I'm in I'm in this town. I'm in this town. And we're constantly analyzing the markets. And so, and we like really like to be ahead of the curve. And one of the areas that I'm really hot on right now is Texas. And in the areas of Texas, like Austin is overpriced, saturated. So, but we're in other areas of Texas, college towns, which are just phenomenal. The value, building new construction duplexes in these spots does fantastic. The Midwest, I'm still really hot on the Midwest, whether it's Kansas City, in those areas, I'm still hot on. So from an investing perspective, I love Tennessee, the Midwest, Texas, areas that I love. But then also from a purely residential or retail play, people moving in and moving their families there, you see an enormous growth in areas in Idaho, for instance. In like Boise, Idaho is one of the hottest markets in the country right now, because so many people are leaving California in droves. So they're getting out. Higher taxes, the cost of living is just way lower. People move to Idaho from California. They can't believe they can get a burrito for $4 when they used to pay $12 in California. So, and the amount of construction, I was touring a lot of these properties. If anyone watching right now wants to go to my YouTube channel, the Morris Invest YouTube channel, I did a property walkthrough of a bunch of new constructions in Boise, Idaho, not for rent. Like I would never buy those for a rental play. It's way too expensive, priced too high for my blood. But the amount of growth where families are moving is phenomenal. And I also think Atlanta is still a hot market. If you can find good deals there, that city just continues to push further and further out, and they continue to build. I'm also hot on North Carolina. I invest there as well, and that's something that my company does as well. So, like I said, my company, we're constantly, because people call us or they'll book a call with my team at Morris Invest, and they'll say, hey, I heard Clayton on a YouTube video from 3 years ago talking about this area, or this like Indianapolis, and things change, things shift. So our team will kind of tell you when we're on the phone with you, like where we're currently seeing the best, most impactful value for your dollar, where we can get the highest return on investment. And also we want to be in areas where it's landlord friendly. Texas is one of the best and most landlord friendly states in the country. If you have someone's not paying their rent and you need to go through an eviction process, Texas does not fool around. You'll be out. Other states like New Jersey, where I lived, California, you could be waiting on an eviction process for 9-10 months sometimes, dealing with eviction court and getting lawyers involved, because it's not landlord friendly. So you need to pay attention to those things. And that's something that we're passionate about at my company.
Definitely. I want to ask you, Clayton, about the relative return in real estate compared to the stock market. And so more of a question of diversification, and should people be investing in real estate, the stock market, or both? Where do you sit in that equation?
Well, I'm not a stock market investor at all. So I don't have any paper assets, because to me, that's what stocks are. They're paper assets. Now, if you are, so I like performing assets, real tangible assets, which is real estate, things that actually exist, that actually I'm able to depreciate on my taxes. I'm actually able to get monthly cash flow. I'm able to use it as a tax shelter, and I'm able to construct and build a business around owning these assets. I'm able to drive and see my properties if I want to, business expenses for owning these assets. When you're a stock market investor, there are really savvy stock market investors who sit, I know some of them, right? They'll sit there all day with computer screens all over, right? And they're constantly, they're day traders and they're very fast. They're using, high efficiency traders, right? They're in a split second, they're making, there's no way I'm going to do that. There's no way that's not something I would ever do. And so to me, owning real tangible assets is the play. So I don't own anything in the stock market. I used to, back when I worked for a company and I had, was invested in a 401k. I could not wait to leave that job in order to be able to access that 401k, roll it over into a self-directed IRA, and then invest that way. So when you look at historical returns of the stock market and what you're dealing with, maybe a 10% return. If you're counting for inflation, about 3% in there. So you're about 7%, right? S&P 500. Well, the reason I'm not a fan of it, you go to a company, invest in your 401k. I just did a whole video on this. It's going to come out soon. I'm super excited about why I think the 401k is a scam. I mean, it really is. Even the founders of the 401k hitting over the head with the idea that it was never meant to stand on its own. It was meant to work in tandem with pension plans, which are crumbling. So you're investing in the stock market in the 401k plan. It's not keeping up with inflation, right? So you're having to put money into something that you're hoping to take money out of years later, tax deferred, right? So then you're investing with the idea that, wait a minute, I'm going to be in a lower tax bracket when I retire. I don't know about you, but I want to retire in a higher tax bracket. I want to retire wealthy. So this idea of, it's tax deferred. I'm not paying taxes right now. I get defer these taxes for years to come. So when you retire, you're going to be poor. So you'll pay less taxes. You're going to pay taxes at some point. Why not pay them now at a level where you're much lower and then retire more wealthy? So I'm not a fan of investing in the stock market. And plus, it's one of those things where I just don't understand how you could be invested in a company. It could go down to $0 in value on something you had no control over. You're right. This company does something incredibly stupid that you invested in. All of your money is gone, gone, vanished, right? Look what happened. You only need to look at history. Look at the stock market crash. Look at 2007, 2008. All these people had money in a 401k plan, right? And they lost 10 years of growth. And after 10 years, they're like, my 401k is back to where it was now before the collapse. That's great, I say to them. So you mean to tell me you lost 10 years of growth? You could have had that money in property, in owning real estate that every month was producing cash flow for you every month and appreciating. And you got to depreciate on your taxes and leverage to buy other real estate. Instead, 10 years wasted. Now your 401k is back to where it was pre-recession. Great. 10 years gone. So I think the stock market mentality, it scares me to be invested in Wall Street. I mean, Wall Street guys can get wealthy if they're fast and they know what they're doing. But the average consumer, the average investor who's in a 401k, I think they get screwed. And all of the fees that they're paying to these money managers, to me, it's a tragedy. And I wish more people understood the power of taking control of their own finances, putting it into a self-directed IRA, buying real estate, gold, silver, tangible assets that aren't going anywhere. That's my thought.
Definitely, Clayton. One of the great books about this subject and great studies about fees and about the average investor came out from Dalbar, and the average for the S&P 500 between 1992 and 2019 or 2013, wherever they did the survey, the average investor in a mutual fund, the best performing mutual fund, it generated about 20% return. The average investor in that fund made 4% because he kept going in and out of the fund instead of letting the fund just ride, and he ended up not even beating. So it is a great tragedy.
Right.
I want to ask you, look, in the same way that people are scared about the stock market, many people are scared about real estate. They say, look, it's floating on a sea of debt. All of these mortgages 2008 was papered over. Should we expect a huge meltdown again? Should we expect a 20%, a 30% meltdown? Talk a little bit about the fundamentals of real estate in this country in terms of demand and supply and demand and all that kind of stuff. And from your perspective about the risk of a big correction in prices.
Yeah. No, thank you for asking me that question. I mean, about the risk involved in real estate and where do we see like a housing bubble, any of that. Look, I'm not Nostradamus, but I think if you look at what happened last time during the housing crisis, you had banks who were artificially propping up these loans back based on faulty and bogus appraisals, right? And giving loans to people that didn't have jobs, famously ninja loans, right? No income, no job. Didn't matter. Banks were writing these things left and right. And then when these people actually lost, or if they had a job and they lost their job, now they're able to pay this more artificially propped up. I think that fundamentally has changed dramatically. And it's very difficult today to get a mortgage. I don't know if you've tried. In the United States, it's not easy. The amount of paperwork that comes to you, then they come back and say, oh, we need these 5 extra additional pages. My wife likes to joke that every time we do a loan on to get one of our rental properties, she cries. But now, like, what we've done at our company is non-recourse financing. So a bank has come in and looks at this asset, right? Let's just take, for example, one of our like new construction duplexes that our team is building. So the bank will come in as a non-recourse loan and look at that and say, hey, that's awesome. Great job. Oh, and you're placing a tenant in this property. I don't care about Clayton, the guy, or the owner of the property. I care about the asset. This thing is not overvalued. It's perfectly in market with comparables. It's well built. If God forbid Clayton, the guy getting the loan, is out of the picture, we, the bank, could sell this in a heartbeat, or add it to our own bankers' portfolio. So, banks, I think that's a trend that you're going to start to see more and more banks not focused on me, focused on the asset, which is mind blowing to me that it hasn't always been that way anyway. Right? It's more focused on the person, the borrower, than it is the asset. So I think the fundamentals have shifted dramatically, and now I think you're seeing much more sound. For instance, in Michigan, let's just talk about Detroit, for instance, as an example. Over 50% of all purchases over the past few years have been cash purchases, and that's not just investors coming in. That's young families who are wanting to get a start, making a cash purchase of a property. So they're not carrying any mortgage debt, which is totally different than it was in 2007, 2008, when people were getting 110% financing on their property, right? They were even rolling in their closing costs into the loan of their property. So I think you're seeing a big shift. I still think that, it's incredibly difficult to get a loan. All real estate is local. Ridiculous. If you want to talk about a housing bubble, I think every real estate is totally local. And so if you want to talk about like an area like San Francisco, for example, okay, .com area, you have a lot of Silicon Valley. People are sleeping under overpasses in California right now. It's ridiculous. People are having to commute 2 hours just to get in there. Values. So there's no way in the world I would ever buy a property in San Francisco. Values are just ridiculous, right? So you're going to see some shifts there. There was a $900,000 condemned property that was up for sale. I think it was a 3-bedroom property, $1,000. That's ridiculous. Then you have other areas of the country that are totally affordable, and there's an incredible demand for affordable housing. And we need more rent. We need more places for people to rent in this country. So you're seeing a huge shift where America is a rental nation right now. So I don't see this huge housing crisis that people are talking about happening again. I see some of the fundamentals are just totally different than they were. But you might see bubbles in certain areas. And I think that may be a concern. Vancouver, for instance, Chinese buyers buying up, not able to buy it anymore, and prices, going down, and problems there. In California and New Jersey, some of those higher priced states. And look, I think one big shift too is that millennials or younger people don't want their parents' big houses anymore. Parents don't want, there was a generation of older folks who wanted these huge 7-8 bedroom houses, and on golf courses. And their kids are saying, hey, I don't play golf. I don't want a house like that. I want to be in a city. I don't want 8 bedrooms that I can't manage and deal with. So I think you're going to start to see houses get smaller. Also, these giant McMansions, I think, are going to start to go away.
Morris, so Clayton, I want to ask you, where can people check out the website, and if they want to invest in real estate, get started, or just increase their portfolio with some of your properties, or take a look at them at least, where can they go?
It's easy. Just it's Morris, Morris, morrisinvest.com is our website. If you go there, you'll see the schedule a free consultation. So just click it, free, and just pick a time on your calendar that works for you. We'll get on the phone with you for 30 minutes. We want to get to know you, figure out, what are your goals, and take you through that education process, and then see if it's a fit for you. We like to build really long-term relationships with our clients, people who've been with us for many, many years. That's our goal. So if that sounds like something you might be interested in, reach out to us and check us out. We'd love to help you.
Clayton, thank you very much for taking the time today. Again, morrisinvest.com. It was a phenomenal interview. I got a lot of value out of it, and we'll definitely touch base with you again.
Thanks so much. Thanks for having me.